Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver sits while spoofing prosecutions proceed. We know that silver markets are being manipulated. They are being rigged, and they're controlled by the banks and the feds and the higher ups, the people that have the money and the power to do so. And this is not a theory. This is not a conspiracy theory. We don't have to get on our tinfoil hats. People are actually getting arrested for it. 3 of JP Morgan's employees already have been prosecuted, arrested for this, and it is a punishable crime. And now, since the government is trying to crack down, or judges are trying to crack down more on this, more and more of this information is getting released, letting us know that it's larger than we expected. I mean, we all expect shadiness going on behind the scenes, but this is something really serious, and this video is going to explain what's going on with JP Morgan with more charges against them. The link to this article will be in the description, but anyways, let's jump into it. Silver remains in range. Gold has been outperforming silver for years. JP Morgan is under the hot lights. Prosecutors have a lousy track record, but they are going in for a big fish on spoofing. Silver will eventually move higher, and spoofing will not go away. So last year, the U.S. Department of Justice indicted a handful of former JP Morgan traders on spoofing and conspiracy charges. Investigators charged the individuals with manipulating the silver and gold markets on thousands of occasions. Thousands of occasions. This means they're placing false buy orders on these exchanges and canceling them before they go through, tricking the other investors on the exchanges to think that a whole bunch of silver is being bought up, and then in turn inflates the price. It's crazy. It's highly illegal. The wheels of justice grind slowly, but there should be additional developments over the coming weeks and months. A group of market participants continues to believe that JP Morgan is at the center of a massive market manipulation scheme dating back to its takeover of Bear Stearns during the 2008 global financial crisis. Some believe that the world's largest private U.S. banking institution continues to control the silver market and the price of the precious metal. Now, why would they want to do this? This is the question. Why? Well, because the gold to silver ratio shows what metal is the better purchase. And if they are in control, if they can keep silver extremely cheap, then they can buy it for cheap. And in return, when prices fluctuate or rise, then they can sell. See, they're placing these false buy orders, in return making people think that silver prices is rising, that people are buying up all this silver on these exchanges. And when they cancel them, the order is completely dropped. So it's a false flag to the investors, and it's not fair, and a lot of people lose money from it. So it's affecting a lot of people, and it's highly illegal. See, silver is going nowhere fast. Even though the next leg for a long-term bull market in gold got underway in June 2019, silver has yet to challenge its level of critical technical resistance at $21.09 per ounce, the July 2016 high. If silver is a tightly coiled spring ready to snap to the upside, the Velocity Shares 3x long silver ETM product USLV will magnify the price action in the silver futures market on the upside. See, silver still remains in range. Since the January 8th nearby COMEX March silver futures contract is traded at a range between $17.28 and $18.89 per ounce. However, if we exclude the high from January 8th and the low from January 29th or July 29th, the range has been tighter at $17.42 to $18.37 per ounce. At $17.75 on February 14th, silver was trading closer to the bottom of its trading range so far in 2020. As the daily chart highlights, the price momentum and relative strength indicators were on either side of the neutral readings on February 14th. Daily historical volatility at 16% has declined from 27% on February 1st as daily trading ranges in the silver market narrowed. See, the total number of open, long, and short positions in the silver market declined from 238,000 contracts on January 27th to 225,000 contracts on February 13th, a drop of 5%. Silver is trading in a range, and technical metrics are not providing many clues about the future path of the least resistance for the price of the precious metal. Now, this is going on talking about how gold has been outperforming silver for years, which is true, but in the gold to silver ratio shows that. It's gold to silver ratio is still 88 to 1. So obviously gold is overperforming or outperforming silver, but our whole spiel is the ratio has to correct itself. The ratio has to go back to the 70 range, and when that happens, that means silver is going to start outperforming gold. So the price action in gold tells us that silver should be at a significantly higher level. Gold broke out above its critical technical resistance level at $1,377 per ounce in June. At $1,586 per ounce on February 14th, on the April futures contract, the price is $208 or 15% higher than the previous resistance level that has become support. See how this resistance level became a support level now. The technical level in gold dates back to the July 2016 high, and at that time, silver traded to a peak of $21 per ounce, while gold rose to a successive peak of $1,559 in September 2019 and $1,613 in early January. Silver never challenged the 2016 peak. In September, the high in the continuous silver futures contract was $19.54, and in January, when gold made a higher high, silver made a lower peak at $18.89 per ounce. Silver has underperformed gold, but that's nothing new. So the long-term modern-day average of the silver-gold ratio dating back to the 1970s is around 55 to 1. The ratio has not traded at that level since 2013. So now let's go into JP Morgan, the moral of the story. This is the main focus of the story. And by the way, before I go on, the gold to silver ratio is a very interesting thing. In the 30s, FDR changed the ratio from 16 to 1 to 75 to 1 overnight. He did that. So in the grand scheme of things, silver's been being manipulated and controlled for several years. Several years. So JP Morgan under the hot lights. Many market participants have blamed JP Morgan and other leading world precious metals dealers for the weakness in the silver market. For decades, I have read about conspiracies that have created a big hand of selling above the silver market. After the arrests of traders and even some sales executives at JP Morgan, the Dutch bank, and Merrill Lynch was caught as well, and other financial institutions involved in gold and silver trading, the U.S. Department of Justice, CFTC, are taking a long, hard look at JP Morgan. See, JP Morgan called Bitcoin a scam before, and then right afterwards, when shot the price of Bitcoin down, then they bought millions of dollars in Bitcoin. JP Morgan has got caught with misprinted gold bars that were most likely be sold on the black market. They're just a shady company. I do not like them. All of you guys know that, just from my history with them. They have already charged traders from New York, London, and Singapore desks with manipulation and conspiracy to commit fraud. The charges stem from activities that took place over a decade. While spoofing and other fraud charges are significant, RICO charges are more severe as they allow prosecutors to charge multiple criminal acts involving a group of people within the same institution. The current investigation may lead to more arrests and even more charges against JP Morgan. So, a federal judge in Chicago recently ruled that both wire fraud and spoofing charges were appropriate in case for the two former Dutch bank traders, which will stand as precedent for the case against JP Morgan traders and perhaps the institution. We are likely to see more indictments as investigations climb the chain of command within the banks. More current and former senior traders may face charges as well as higher-level executives at the bank. Some market participants are looking for an inquiry to go on the top of JP Morgan CEO Jamie Dimon. Ted Butler wrote an article, The Genius of JP Morgan. So this is not new. They're taking this serious. See, prosecutors have a lousy track record, but they are going for a big fish on spoofing. The DOJ and the CFTC are likely to continue to charge others in widening spoofing and RICO investigations. I would not be surprised to see the inquiry lead to arrest of more traders, even the person who ran the commodity trading business at JP Morgan for years. Some of the current traders are facing charges and long prison terms under RICO charges are likely to sing canaries to give the DOJ enough for their indictments. However, it's essential to remember that the prosecutors have a poor conviction record since 2008 with these high-profile cases. A jury acquitted the two hedge fund traders at Bear Stearns at the heart of the mortgage-backed securities disaster. Few, if any, mortgage bankers found themselves behind bars in the post-2008 headhunting by the DOJ regulators. If the smoke leads to the C-suit at JP Morgan, the fines will no doubt be high, but the bank and Mr. Dimon will remain insulated, which they're saying they won't get penalized, they won't get punished. So this is definitely interesting stuff. I'm curious what you think about silver prices being rigged? Do you think this actually is affecting prices? Do you think this could affect prices, or it might, but not to the extent that people are saying it is? Or do you think silver would be $100 plus if this silver spoofing wasn't going on? If people weren't manipulating, weren't rigging the markets, do you think that the price would be higher? People always joke about gold and silver being in a bubble, but what if silver really is in a large bubble just waiting to burst? And when it bursts, it could explode. Who knows? Only time will tell. Only we can speculate. But the best way to do it is gauge what's going on in the economy and apply that to a chart analytical standpoint. That's why in my videos I try to give a chart standpoint, a chart-based perspective on it, along with conveying what's going on in the economy, whether it's geopolitical fears, U.S.-China trade negotiations, the coronavirus, Hong Kong protests, stock market volatility, interest rates getting cut. I try to let you guys know what's going on with all this stuff, because if we can start to apply that with the chart analytical patterns or the chart analysis of it, then we can more appropriately and more accurately see where silver prices are headed. So anyways, I hope you guys enjoyed this video. If you did, the link to this article will be in the description. Go check out my video I posted earlier today. One of my favorite videos. I definitely think you guys and gals will enjoy it a lot. It'll be in the top left-hand corner. If you already haven't seen it, I highly recommend it. If you already have, check out another video in the top right-hand corner. Anyways, thank you so much for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.